Hey everyone, welcome back to the channel. If you're looking for a simple rule-based trading system that takes the guesswork out of finding high probability setups, you're in the right place. In today's video, I'll show you exactly how my MTF 50 EMA indicator works, how I use it across different time frames, and why I built it to make trading as simple and visual as possible. We'll go through real chart examples, break down the 3 confluences that I use before I enter a trade, and I'll show you how the same strategy can be applied whether you're scalping, intraday, or swing trading. Let's jump into the charts. Okay, on my chart, I've included all 3 major time frames. So whether you're scalping, intraday, or swing trading, these are the time frames in which you would do that on. I like to scalp. I like to be in and out of the market really fast. So I'm mainly executing my trades on the 1 minute. However, I will jump back and forth between the 3 and 5 minute, but I'm mainly executing on the 1 minute. If you prefer a slower pace trading style, then you might prefer swing trading, and you'll execute those on the 4-hour, daily, or weekly. You'll see as we get further into this video that there are far few in between opportunities with my indicator for swing trading, but when there is one, I take it and they usually do perform. So, all right, so we're going to start off on the 1 minute. So go over to your indicator settings, and I want you to select the 1 minute, 3 minute, and 5 minute EMA. So those are the EMAs that you're going to keep on when you're scalping. So whether you're on the 1, 3, or 5 minute, those are the EMAs you're going to keep on. And then go down to the multi-time frame fair value gap, and then select time frame 1 and time frame 2, and then click OK. Okay, and then we're just going to simply go over what I look for an A+ setup. So number 1, all the EMAs moving in the same. Okay, you ask yourself that, and then ask yourself an alert. Are you getting an alert signal? And then number 3, out of a fair value gap. So this is what I look for an A+ setup. For an A setup, you'll get 2 out of the 3 confluences. I go more in depth into this in another video that I have about the A and the A+ setups. If you want to go ahead and refer to that, just for right now, we're just going to simply go really fast through it. So like this, for example, would be an A setup because you're getting 2 out of the 3 confluences. So you're getting an alert signal and it's out of a fair value gap. This is a riskier trade because you're going against the trend. So these EMAs are going in the same direction. These are indicating that we're in an uptrend. So if you're going to sell, that's a higher risk. So I would recommend doing half risk. So if you're risking $250, just do half of that. And then we're going to go down here, select our short position tool. We're going to place it on this candle. And we're always shooting for a 2 risk to reward, or as close as you can. So right there. Right click, create limit order, select stop. We're always selecting stop. And then this is half risk. So I'm on minis. You guys will more than likely be trading on macros. So, but for right now, I never switched it over. So right now we're just going to stick with this. So this is half of what I would risk. And then click sell. And then I'll speed this up a little bit. Okay. And we won that. Once we're in this, and I have other videos on this, but once you get triggered into the position, you're going to mark off your 1-to-1, which would have been like right there. As soon as this candle came down, you would have moved your stop loss to break even. So right like that. And then we ended up winning that trade. Okay, so that's how you would execute on the 1 minute. Now let's go up to the 3 minute. Okay, right here. This is a perfect example. Let me make this bigger. Right here of what you don't want to do. So do you see how this candle right here made the fair value gap? You don't want to take an entry off of a candle that makes the fair value gap. You want to see price come back into this fair value gap and reject out of it. And this, even though you have an alert signal, I still wouldn't have taken it. It did end up hitting a win, but According to my back testing and stuff, I would not have taken this, but yeah. So let's move this over. So we have an entry right here. Let's take a look at this one. Okay, so this is an A+ setup because all of our confluences came together. All the EMAs are moving in the same direction. You have the 1 minute, 3 minute, and 5 minute. Here's an alert signal, and it's out of a fair value gap, and it's out of a 15-minute fair value gap, making this a high probability setup. So go down here, select your long position tool, and place your entry on this candle. I can make it bigger. Okay, and then your risk to reward, mark off a 2. Okay. Right click, create limit order. This is a full risk trade. And then there you go. Okay, and we won that. That's what I like, you guys, about these high probability A+ setups is look how fast you hit your 2 to 1 in 6 minutes, because each of these candles represent 3 minutes. So that was in 6 minutes. Okay, let's move over to the 5 minute. Okay, here's an entry right here. So we're getting 2 out of the 3 confluences. So we're getting our buy alert signal, and it's out of a fair value gap, and it's out of a 15-minute fair value gap. But do you see how all these EMAs are intertwining? So they're not moving in the same direction because you have the 1 minute, 5 minute, and 3 minutes down here. So this is a riskier trade. So this is an A setup. And then I'm just going to show you how if you marked off your 1-to-1, just like that. Do you see how price came up here and closed on that horizontal line? If you would have placed your horizontal line right here, just like this, you would have moved your stop loss up to break even, and you would have had time to do this because each of these candles now represent 5 minutes. But do you see how price came back down? It would have got you out, and had you not moved your stop loss to break even, it would have came down and got you out for a loss. So that's why it's very important to mark off your 1-to-1s and move your stop loss into profit. Okay, so let's now move up to the 15-minute. So now each one of these candles here represent 15 minutes. Okay, and then we're going to go over to our indicator settings. And we're going to take off the 1 minute, 3 minute, and 5 minute, and we're going to select the 15-minute. And then I always like going up at least 1 time frame. Like, so in this case, this will be the 1 hour. So I always like going up like that. And then it's nice sometimes getting a pullback into that 1 hour and rejecting out of a fair value gap. And those are always nice too. Okay, let's see if there's anything here. Actually, let's see if there's, let's go to another market and see. So this is silver. Okay, let's take a look at this. All right. This would not be an entry, even though you got your alert signals. There's no fair value gap. And if you did end up entering on this position, this candle next to it did not trigger us in, so you would have deleted it. Let's see. I think there's a teeny tiny fair value gap here. Okay, yeah. So this would be an A+ setup. These are moving in the same direction. Well, they're kind of together, but still, I would have considered this an A+ setup. We got our alert signal out of a fair value gap, and I would have marked off a 2, create limit order. Okay, and then I think this would have been a loss because your 1-to-1 would have been right here, and the price never came down to that. So that was a loss. That's okay. That happens. Okay, let's take a look at these. Okay, so I would not have taken this because we're only getting an alert signal. This needs to reject out of a fair value gap, and this did not do that. If it came up to here and rejected out of that, then yeah, I would have taken that, but you're going into a fair value gap, and that's too risky. I would not take that because look what ends up happening. Well, it doesn't look like it even triggered you in, but this one also, it's not out of a fair value gap. I would not have taken that. You're going against trend, making this a high or a riskier trade. It ended up hitting, but that's a risk you would end up taking, and I don't take those. I don't like taking those. So that ended up hitting. Now let's go up to the 1 hour. So now each one of these candles represent 1 hour. And then go into your indicator settings, and we're going to take off the 15-minute. And then we're just going to keep on the 1 hour. So as we move up into these higher time frames, the 1 hour, 4 hour, and the daily, I just like keeping that time frame EMA on, and then taking an entry off out of a fair value gap off of that EMA. Those are really nice. Let's see. Okay, perfect. Right here, you got a nice rejection candle off of that EMA out of this fair value gap. Oh, I forgot. Go back into your settings, and you need to mark off the higher time frame fair value gap. So take this off, take this one off, and put the 1 hour and the 4 hour fair value gap on. Okay, so there we go. All right, so you have a nice rejection out of this fair value gap right here, and you got your alert signal. So now when we get up to these higher time frames, also the 1 hour, 4 hour, and daily, the only two confluences that you're looking for is an alert signal and out of a fair value gap. You don't need to put all the EMAs on there and make sure they're moving in the same direction, because this is what I like to look for. So this ended up hitting on that. So that's your 1 hour. Now let's move up to 4 hour. So now each one of these candles represent 4 hours. So go back into your settings, and now you're going to select 4 hour and take off the 1 hour. Okay. And actually, you know what? Let's go back and do our fair value gaps. I keep forgetting to do that. So now you're going to put the daily and take off the 1 hour. All right, let's see if this was an entry here. Okay. Yep. This came back down. You would have entered off of this candle. However, this candle right next to it did not trigger you in, so I would have deleted it. You would have entered on this candle. This came up, got you in, and then came back down and got you out. This would have been a loss. That's okay. This would have been an entry. This candle next to it did not trigger you in, so that would have been a loss. So let's see if there's anything over here. See how there's a lot less opportunities once you get to these higher time frames, but they're also a lot smoother, not smoother, but just like they don't move as fast. So you might like that. Let me check the Russell. Okay, let me see if this was a fair value gap. There's an alert signal right there. Okay, perfect. Right here, you got your alert signal. Price came back in to retest this fair value gap. It rejected out of it, and that hit for a 2 to 1 right here. Okay, so that's the 4 hour. And then let's go up to the daily. Change your settings in here. So now put the daily, take the 4 hour off, and then just change your fair value gaps to the daily, just like that. Click OK. Let's go to Bitcoin because I know Bitcoin is really good on the daily. That would have been, let me see. This looks like, was that out of a fair value gap? No. So do you see how this was not out of a fair value gap? I would not have taken this. So it needs to be out of a fair value gap. Was this one? I don't think so. Okay, this one wasn't either. Do you see how you're only getting your alert signal? It has to come back down, like into this fair value gap and then reject out of it. Think of these fair value gaps as like a springboard, like a trampoline. It has to come in here and you want to see momentum out of it and reject. And also these EMAs are the same way. When price comes back down and retests these EMAs, you want it to reject off of it. Okay, let's see. Maybe Bitcoin does not have. Okay, here's an entry right here. So we got our alert signal out of a fair value gap, and that ended up hitting our 2-to-1. So you guys, my biggest piece of advice is to pick one time frame and stick with it. Learn how it moves, learn how it reacts to news, and stick with that one time frame. Wait for all the confluences to align because consistency comes from when you master one approach, not when you're jumping in between time frames or changing up your strategy every day. Just pick one time frame. If you found this video to be helpful, please be sure to like and subscribe, turn on your notifications so you don't miss future videos. I'll be posting more trade breakdowns, live chart examples, and trading education to help you become more of a consistent trader. So thanks for watching, and I will see you in the next video.